investing in property makes sense, investing in the right property takes knowledge. Welcome to the Rewarding Property Decisions podcast. I'm Jarrod McCabe, Director of Wakeland Property Advisory. Join me for expert insights into the fundamentals, trends and opportunities to help you create long-term wealth through smart property decisions.
Hi everyone and welcome to episode 60 of the Rewarding Property Decisions podcast. So over the last month or so there's been plenty of discussion regarding investors but also renters as well, particularly with the way vacancy rates are currently sitting, interest rates, all that sort of thing. So we thought we'd have a look at, and a lot of investors have been considering their position within the marketplace with some of the discussions around rental caps, that sort of thing as well. So some of those discussions that we've been having with investors have been, should I retain my property? If I should sell it, what works do I need to carry out? And if I continue to hold it, what works do I need to continue to carry out? And then, so therefore, should the works be focused, if you are going to carry out work to a property, should they be focused on needs of what a tenant or a renter would want, or needs of, from a resale perspective, what a buyer might want? And they can be two very different things. So it got me thinking, is now a good time to be renovating a property? And there's obviously a number of considerations that need to be made when making this decision. And I thought we could go through some of those today and look at a couple of case studies that we've dealt with fairly recently, because I think when we're talking about whether to renovate now, we need to have those case studies to be quite current. So we'll go through those towards the end of the podcast. So first up, I guess one of the key considerations to make is, can I actually afford to renovate now? And obviously costs have blown out quite considerably in the last few years. From a construction perspective, it's not easy to build at the moment, and the cost of doing so with materials, labour, that sort of thing has increased significantly. So that really needs to be factored in when making that decision. Do I have the budget to carry out works? Obviously, with increasing interest rates and those sorts of things, people have had to tap into savings for those sorts of purposes in different circumstances. So am I actually able to use the funds that I might have saved up to actually carry out the works at the moment? Or perhaps am I better to do some now and perhaps a little bit late, some others later on? So could I paint now and then in a few years' time, could I replace the carpets, or vice versa, depending upon the needs? So all these things need to be taken into account. And one of the other things that I think people really need to consider is, if I am going to do these works, can I do them properly? Because you don't want to do works that are half-baked and then find out in a year or two's time that you've basically got to redo them again at greater expense. So if you're going to do these sorts of works, it doesn't mean going to excessive lengths in terms of expense, but you need to make sure that you're doing them for the right reasons and doing them properly. Which leads me to my next one. Why am I actually going to renovate? What's the purpose of doing the renovation? There's no point in renovating just for the sake of it. There needs to be a benefit at the other end. So is the purpose to improve the property for sale purposes? So am I trying to build up the value of the property for when I do get to the point of putting it on the market? So what are buyers' expectations at the moment? Where do I need to improve the property? Or am I looking at carrying out works to release? So again, then it's what are the tenants' expectations? What do they need? And also, what do I need to take into account with some of the changes that have come into play over the last couple of years in regards to the Residential Tenancies Act? And there's greater expectations, so you'll need to focus on those sorts of things as well. So what's the purpose of the renovation is a really important aspect, and they do differ from sale purpose to rent purpose. So if we look at each of those, if I'm looking at carrying out works for a sale, as I said before, it's far more focused on the presentation of the property. So you tend to find when carrying out works for sale purposes, the things where you get greatest bang for buck are paint, floor coverings, window furnishings, light fittings, tapware, that sort of thing. You can get really strong return on investment. But I also need to understand the market that I'm trying to pitch that property at. So is it likely to be even though it's been an investment property, is my likely buyer to be another investor? Or in the current market, is it more likely to be a first home buyer, second home buyer, that type of market? And in that instance, there might be a greater expectation of fit out and quality of standard of property, and therefore spending money on those aspects could be beneficial too. From a rental side of things, where am I best to go? Well, if you're going to be holding the property for a longer term, and chances are if you're going to be renovating a property for greater rental return, you're going to hold the property for a longer period of time. So there's probably going to be more benefit to carrying out a bit more of a substantial work. So it may need a new kitchen, or it may need a new bathroom, or there may be greater expense in those areas that are going to get you a greater benefit long term, and you'll get continued benefit, not just for the first tenant that you put in, but for future tenants there as well. And you also, if you are going to retain, as I said before, need to make sure that you're complying with the increased rental standards that are required nowadays. Next one is, what does the market, which I guess we've looked at, but we'll just expand on a little bit further, what does the market actually want for each of those sale purposes? So from a sales perspective, because, as I said earlier, we are now starting to see costs blowing out and limited builder availability, in the current environment, there's a real want and need for things to be happening, and I need what I want right now, as opposed to I could perhaps do that myself down the track. People don't tend to have, particularly first and second home buyers, they don't tend to have the appetite to do works themselves, whereas perhaps in the past there's been a bit more of a, well, I'll get into a property that needs a bit of love, I'll put my own touches onto it with my own style of renovation. We tend to find now that particularly first home buyers, they'd rather put their own stamp on a property with the way they style it, the way they furnish it themselves, but they don't necessarily want to have to go through the process of carrying out the renovation themselves. So it's important, if that's the market that you're pitching to from a sales perspective, that the work is done and that they can move straight in and put their own touches on it with the furnishing. And from a rental perspective, particularly, for instance, in the apartment market, where there's a lot more competition from more modern apartments, and older style apartments need to therefore be able to keep up with that. So they need to have a modern kitchen, a modern bathroom, modern facilities, and you need to be aware of what's happening with your owner's corporation to make sure the common areas are also presenting really well. So that's gardens, stairwells, those sorts of things, to keep those listed as well. And that's just a matter of attending your AGMs and making sure you're having a say in what's being done at the properties as well. So what are some of the risks in carrying out works at the moment? Well, as we've said all along, the cost blowout is probably the greatest risk. When you're selling, for instance, if you're going to spend $1, you want to be getting probably at least $2 in return. And if costs start to blow out, there's a risk that you may not be able to achieve that, and you may end up spending $1 to get $1, or worse still, spending $1 to only get 50 cents. So you want to make sure that you've budgeted correctly and that you are going to get a really good return on investment. The other risks are timing, because it's not easy to get a builder at the moment. You may find that a property can sit vacant for a period of time because you're not able to get a builder in there to do the works in a timely manner. So again, planning is really important in that element, because if you plan out, you get your quotes and things organised prior to the property becoming vacant, hopefully you can have the works done in a fairly timely manner, and then either get it on the market or get it for sale or get it on the market for rent fairly quickly, so that you don't have too much time during there. The other one is obviously funding. As I said before, the interest rate pressures that are in place, it may mean that you don't have as much equity as previously thought, and therefore the savings may have to come from elsewhere, or potentially borrowing further. So just make sure that it's going to be workable, and if you are borrowing further, that you're factoring in potential further interest rate rises. Hopefully they're coming to an end, but there's still obviously a chance that we could see another one or two before the end of this year. So they're the main points that I wanted to talk about. So before we summarise today's podcast, I'll just go through a couple of case studies that we've had in recent times. First one was for a client that had decided that they did need to sell their investment property. It was a single-storey villa unit, but it was a little bit unique in that it was on its own title rather than having common property. So that was quite beneficial for this property. It was a bit dated internally. It had been let go. The tenant had been there for a fair period of time and was very happy with the property in its condition at that stage. But in order to sell, it needed to be lifted. Now, the owner of this property budget was a little bit restricted, but even if it hadn't been, I think the advice would have still been the same. We wouldn't have done significant renovations. So we decided that really all we needed to do was to paint it throughout, replace the carpet in the hallway, the bedrooms, the lounge room. We put some new light fittings in as well. The bathroom was where we probably focused most attention because it needed it. We painted the tiles because they were a sort of a beigey, creamy colour, which was a bit dated. We sprayed the bath as well to make it a nice neutral white. The shower base had leaked a bit, so it had dropped. So we needed to get a bit of work done under the floors and lifted it back up. Put a new shower screen on, and then put new taps and a new vanity unit in. So that was where the bulk was, but it wasn't actually a significant renovation. It was more of an upgrade. And then externally, we did some tidying of the gardens and some external painting on eaves and trim work, that sort of thing. So prior to the works being done, we'd had valuation assessments done on the property at around $850,000. The works cost about $30,000 to do. And in the end, when we did go through the process of selling the property, it hit just over $1 million. So very much beneficial, worth doing. And we didn't go overboard. And so what happened during the sale campaign was we had people that were interested in the property that were planning to move in and live in it as is. The eventual purchaser was planning to do that, but after 12 months, they were going to gut the kitchen and put a new open that up and new floor coverings and a brand new benches and that sort of thing. So we managed to engage with both buyer profiles, created great competition at the auction, and got us a really good result. So it was worth doing for that market at the moment. Then another client of ours who was undecided whether or not they wanted to keep the property. Now, as many of you will be aware, our preference for our investor clients, where possible, is to retain high-quality investment properties. And this person was probably a little bit frustrated, but certainly once we had a discussion and they understood why their property that they did own was absolutely worth retaining, they decided that they would hold on to it, which was great. And this was a little single-fronted house in Carlton. So we looked at the costs to upgrade it, and because they were going to retain the property, we decided that it was probably better to go that little bit further than what we'd done on this previous unit, and probably go with a little bit higher spec because Carlton can certainly sustain that, and with the demand from tenants, they would certainly want that as well. So it needed a new kitchen, needed a new bathroom, and also the deck out the back had deteriorated a lot, so we needed to replace a lot of the top boards, and some of the joists and bearers needed to be fixed up as well. So we got that. So the quote came in, and it was a little bit higher than what we'd probably initially expected. So we went through that just to see if there was any way to change it or worth changing it. But we agreed that no, it was still worth proceeding, even at the slightly higher rate. To give you some background, the property prior to the renovations was leasing for $600 a week, and had been given a value assessment of about $1.2 million. It's not a big terrace house in Carlton, so many of you will be thinking, terraces in Carlton are worth more than that. It is a small house on a small block, but very, very well laid out in a really good spot. So it was, we completed the works, which cost us around $80,000 to do that, which increased the rental return up to $720 a week, but also increased the capital value on this property up to about 1.4. So really improved it on a number of fronts. And now that they're retaining it, we had a lineup of people out the door to lease it once the works were done. So it's been really beneficial, and they're very happy that they retained the property and did do the works. So I think in summary, with the discussion today, from a buyer's perspective, a lot of buyers at present don't necessarily have the ability to see through dated works. So I think it is beneficial to lift these properties, and the works, where possible, are definitely worth doing. Now, things will swing back. It's not necessarily going to be this type of market all the time. It'll get back to a point where people will have an appetite to do work themselves as a buyer. So it's certainly worth keeping an eye on that. But definitely at the moment, getting the works carried out is worth doing. And from a rental point of view, I think it definitely is, and you'll get return on investment. The rental market's really tight at the moment, so you possibly can have a slightly less quality. But I think if you're planning to hold your property long term, and there's a period and there's a time frame where getting work done is able to be done at the moment, then it's definitely a time to do it. But you just need to factor in all of those costings and the timing and those sorts of elements when making the decision around when you will do that work. All right. Well, thanks for joining me for episode 60 of the Rewarding Property Decisions podcast. As always, please share the podcast far and wide with friends, family, colleagues, and anyone else who has an interest in property. And if you would like further information on how to make rewarding property decisions, please visit our website, wakeland.com.au. And as always, we wish you the best with your property decisions.